Are you seriously selling your silver because you saw it pull back from $84? Have you lost your mind? I've been telling you for days, that this is nothing but a microscopic correction to grab liquidity before the real explosion. Silver is going to keep rising, breaking through $84 on its way to $100, $200, and ultimately $300. And guess what happened today, January 6th, in the New York trading session? Silver hit $80 again. We're back. The correction is over. The next leg up has begun. Let me tell you something about myself that you need to understand before I drop the knowledge bomb that's going to change your financial life forever. I was born on Wall Street, not metaphorically, literally. My father was one of the best traders in the United States. Top tier. The kind of trader who moves markets, not follows them. My mother is from Hong Kong. She understands the Eastern mentality, the Chinese strategy, the long-term thinking that Western traders can never comprehend because they're too focused on quarterly earnings and next week's Fed meeting. I know exactly how this game works. I understand it at a cellular level. I've watched it my entire life. I've seen the patterns repeat over and over again until it's actually become comical how predictable human behavior is in markets. The playbook is so simple it's insulting. Instill panic and fear in the masses, make them sell, and while they're selling, buy everything, then push the price to the moon. The history repeats itself endlessly, and it's hilarious. Genuinely hilarious how people react every single time like they've never seen this movie before. The price of silver is too high. The RSI is in overbought territory. It has to correct. It has to correct. We need to sell. Please, don't make me laugh. An asset can rise without stopping, without correcting, if that's what has been decided. If the players with real capital, with real power, have decided that silver is going higher, then it goes higher. Period. There's no law of nature that says a correction must happen. That's a myth sold to retail traders to shake them out of winning positions. And today, silver is the perfect example of this principle in action. Pay very close attention to the masterclass I'm about to give you, my friend, because this is not just about silver. This is about understanding how power works, how markets really operate beneath the surface of the charts and the technical indicators, how the game is rigged, but once you understand the rules, you can position yourself on the winning side. We're not just in 2026, we're on the precipice of the Great Reset, the global monetary system that has existed since 1971, since Nixon closed the gold window, since the dollar became pure fiat backed by nothing but military force and the illusion of stability. That system is dying. It's in its death throes. And everyone who understands history, everyone who understands monetary systems, everyone who has studied the rise and fall of reserve currencies throughout human civilization, they know what comes next. The dollar's paper. It's worth less every single day. And real assets, hard assets, metals like gold and silver, they're going to keep rising. They're going to keep accumulating value. Not because they're going up, but because the dollar is going down. China knows this. China has been preparing for this moment for 2 decades. They're not reacting to current events. They're executing a plan that was drawn up years ago by people who think in terms of generations, not election cycles. China is constantly evolving, constantly adapting, constantly positioning itself for the world that's coming, not the world that exists today. And they know with absolute certainty that a monetary change is approaching, a reset, a restructuring of the entire global financial architecture. And to prepare for that, to protect themselves, to ensure they emerge as the dominant power, they're taking ownership of gold and silver. They're accumulating physical metal at a pace that's unprecedented in human history. And in doing so, they're pushing the prices to the highest levels we've ever seen. But China isn't doing this for fun. They're not speculators hoping to flip their silver for a quick profit. They're securing strategic resources. They're building a war chest. They're preparing for a world where the dollar is no longer the global reserve currency, where trade is not denominated in Federal Reserve notes, where real wealth is measured in tangible assets, not digital ledger entries in a computer system that can be hacked, frozen, or confiscated at the push of a button. Now let me connect all of this to what happened today and what's been happening over the last several days while most people were distracted by noise, by headlines, by the endless stream of meaningless information that floods social media and financial news websites. Today, January 6th, in the New York trading session, silver broke back above $80 per ounce. We touched $80.20 at the high of the session. This comes after a brief dip below $77 that had all the weak hands panicking, selling their positions, posting on Reddit about how the bull market is over, how they knew they should have taken profits at $79, how silver always does this, how they're never going to trust precious metals again. And while they were panicking, while they were capitulating, while they were giving away their silver at discounted prices, who do you think was buying? China, the U.S. Department of Defense, J.P. Morgan, the institutional players who understand what's really happening. They were buying every single ounce that retail was dumping. They were laughing all the way to the vault. This dip to $77 wasn't a market crash, it wasn't a change in fundamentals, it was a liquidity grab. It was a coordinated effort to trigger stop losses, to shake out leveraged traders, to force weak hands to sell before the next leg up. And it worked perfectly. Billions of dollars in stop losses were triggered, margin calls forced liquidations, and the smart money absorbed every ounce of that selling pressure and positioned themselves for the move that's happening right now as I speak. Silver is heading to $84. That's the next target, the level we touched just days ago before the coordinated smash. But this time, when we break $84, we're not coming back down. This time, the breakout is real. This time, every retail trader and every hedge fund that's been fighting the trend, that's been shorting silver because they think they're smarter than the market, they're all going to get liquidated, wiped out, destroyed, and their forced buying, their panic covering is going to be the fuel that propels silver from $84 to $100, from $100 to $120, from $120 to $150 and beyond. China is pumping billions of dollars into the silver market every single day, not millions, billions. With a B, they're in favor of the trend. They're riding the momentum. They're not fighting the market. They're amplifying it. And as long as they keep buying, as long as they keep removing physical metal from the Western vaults and shipping it to Shanghai, the price has only one direction to go, up. Now let me address the people who are saying, but $80 is so expensive. Silver has never been this high except for brief moments in 1980 and 2011. How can I buy at these levels? Wake up. We're in 2026. The dollar has lost more than 99% of its purchasing power since 1913. The inflation since 2020 alone has been catastrophic. Housing prices have doubled, food prices have nearly doubled, energy costs have exploded. But you think $80 for an ounce of silver is expensive? Are you insane? Silver is on sale at $80. It's a bargain. It's the deal of the century. Because we're about to witness the Great Reset, the restructuring of the entire global monetary system. And when that happens, when the dollar loses its reserve currency status, when trade is no longer conducted in Federal Reserve notes, when the world realizes that the emperor has no clothes and the dollar is backed by nothing but debt and military threats, silver is going to be repriced to reflect its true value. And that true value is not $80, it's not $100, it's $300 minimum, maybe $500, maybe $1,000 if the system truly breaks down. Let me show you what's really happening beneath the surface. Let me show you the game within the game that most people will never see because they're too busy staring at 5-minute charts and reading headlines. On December 15th, 2025, while everyone was Christmas shopping and thinking about New Year's Eve parties, the United States Department of Defense signed one of the most significant deals in the history of strategic resource acquisition, a $7.4 billion deal to build a massive critical minerals processing facility in Clarksville, Tennessee, in partnership with Korea Zinc. This is not a small grant. This is not a research project. This is the first major non-ferrous metal smelter to be built on American soil since the 1970s. Think about that. For 50 years, the United States was content to let China process its metals. We exported the raw materials, let them do the refining, and imported the finished products. But now, suddenly, in the middle of a silver squeeze, Uncle Sam is dropping $7.4 billion to bring the processing home. Why? Why now? Because they know what we know. The global supply chain is breaking. The Chinese export controls that went into effect January 1st have cut off access to refined metals. And without those metals, without silver specifically, the United States cannot build the weapon systems it needs to maintain military dominance. But here's the most shocking part. The Pentagon is taking a 40% equity stake in this project. They're not just a customer, they're an owner. This means the silver, the zinc, the indium that comes out of this smelter is not going to the open market. It's not going to be sold on the COMEX to help JP Morgan cover their shorts. It's going straight into the strategic stockpiles of the US military. It's being removed from the commercial market before it's even refined. Do you understand what this means? The US government just admitted, with a $7.4 billion receipt, that silver is so critically important, so strategically vital, that they cannot trust the free market to provide it. They have to seize control of production directly. They have to own the supply chain from mine to missile. This is resource nationalism. This is what happens when governments panic about shortages, and if the most powerful military on earth is panicking about silver supply, what does that tell you about the price trajectory? This facility is designed to process 1.1 million tons of raw material annually. It will produce 13 specific non-ferrous metals. 11 of those 13 are listed as critical minerals by the U.S. Geological Survey. Silver is at the top of that list. The government looked at their stockpiles in December. They looked at the Chinese export ban coming in January. They looked at the Shanghai premium exploding to $7 over the COMEX price, and they panicked. They realized they were naked. They realize that without silver, they cannot build Tomahawk missiles, F-35 fighter jets, or next-generation satellites needed to compete with China. And here's the kicker. The entity financing this deal, the bank that's structuring the investment, is JP Morgan. Yes, that JP Morgan. The same JP Morgan that has been the biggest shorter of silver for the last 15 years. The same JP Morgan that has manipulated the COMEX futures market, that has spoofed orders, that has coordinated with other banks to suppress the price. Why is the biggest short in history suddenly financing the biggest physical infrastructure project in 50 years? Because they know the game has changed. They know the paper market is dying. They know that in a world of physical shortages, holding a short position is financial suicide. So they're pivoting. They're moving from paper games to physical control. They're positioning themselves to own the flow of silver, to be the gatekeeper between the mines in Latin America and the military installations in the United States. They're admitting with their actions, not their words, that the era of paper is over. Physical is king. This smelter is specifically designed to process concentrates from Latin America, from Mexico, Peru, Bolivia, potentially from post-conflict Venezuela. JP Morgan knows that Latin America produces the silver, but historically that silver was shipped to China for refining. By financing this plant, JP Morgan and the Pentagon are cutting China out of the loop. They're creating a closed supply chain. Latin American mines to Tennessee smelter to Pentagon missiles. And JP Morgan sits in the middle, financing the trade, taking a cut of every ounce, ensuring they have first access to physical bars when the squeeze goes vertical. Now let me show you what's happening in real-time price action. While the COMEX in New York is trying to convince you that silver is worth $80, the Shanghai Futures Exchange is screaming a different story. As of this morning's close in Asia, silver in Shanghai hit 18,420 yuan per kilogram. If you convert that to dollars and troy ounces, accounting for the current exchange rate of roughly 7.1 yuan per dollar, you get a price of approximately $82 per ounce. Not $80, not $78, $82. Do you understand what this means? There are two prices for silver right now. The fake price in New York, controlled by paper contracts and algorithmic manipulation, and the real price in Shanghai, where actual factories need actual metal to operate, and they're willing to pay whatever it takes to get it. This $2 spread between New York and Shanghai is not an anomaly. It's not a temporary dislocation. It's a permanent feature of a broken market. It's the arbitrage vacuum that's sucking physical silver out of Western vaults and shipping it to China at a rate that will drain COMEX registered inventory to zero by the end of this month. For 50 years, New York and London dictated the price to the world. If New York said silver was cheap, it was cheap everywhere. But today, Shanghai has looked at New York and said, "We don't care what your paper price says. We need the metal and we're willing to pay more to get it." This is the death of Western price control. This is the emergence of a new pricing regime where physical buyers in the East set the real price and paper traders in the West scramble to catch up. And this is why silver broke back above $80 today. The market is trying to close the gap. The COMEX price is being forced higher by the reality in Shanghai. The arbitrage traders are buying every ounce they can find in New York and shipping it to China for an instant $2 profit. This creates buying pressure. This drains inventory. This forces the paper price to rise to match the physical price. And when the paper price rises, it triggers stop losses on short positions, forcing more buying, creating a feedback loop that propels the price higher and higher until something breaks. What's going to break? Either the COMEX runs out of silver and declares force majeure, or the shorts capitulate and cover their positions, or China backs off and stops buying. Which of those scenarios seems most likely to you? China has $3 trillion in foreign reserves and a strategic plan to dominate the 21st century. They're not backing off. The shorts are already underwater on billions of dollars in losses. They're going to cover eventually. And COMEX registered inventory is at 30 million ounces and falling by 2 million ounces per day. The math says the exchange runs out of silver by January 31st. So we have less than 4 weeks until the system breaks. 4 weeks until the paper market admits it cannot deliver physical metal. 4 weeks until confidence evaporates and the price discovery mechanism shifts permanently from New York to Shanghai. And in those 4 weeks, the volatility is going to be insane. We're going to see $5 moves in a single session. We're going to see gaps. We're going to see trading halts. We're going to see margin hikes. We're going to see every trick in the book deployed to shake out weak hands and protect the shorts. But if you understand what's really happening, if you understand that this is not about technical levels or RSI readings or chart patterns, if you understand that this is about nations securing strategic resources in preparation for a global monetary reset, then you will not be shaken out. You will hold your position. You will add to your position on every dip. You will recognize that every pullback is a gift, a chance to buy what the Pentagon and China are desperately trying to hoard. China is not speculating, they're not day trading, they're not checking the RSI. They're implementing a multi-decade strategy to ensure they have the resources needed for their industrial base, their military capabilities, their technological dominance. Every day they deploy billions of dollars into silver. Every day they remove physical metal from the global supply. Every day they push the price higher, not because they want to, but because they have to. Because in a world of scarce resources and unlimited fiat currency, the only rational play is to trade paper for real things before everyone else figures it out. Wake up, it's 2026. The Great Reset is not coming. It's here. It's happening right now. The dollar is dying. The debt is unpayable. The derivatives are toxic. The only safe harbor is physical assets that have no counterparty risk. And silver is the most undervalued strategic asset on planet Earth. It's used in solar panels, electric vehicles, 5G infrastructure, military weapons, medical applications, electronics. Every major trend of the 21st century requires silver, and we're mining less than we're consuming. The deficit is 200 million ounces per year and growing. At $80 per ounce, silver is not expensive. It's on sale. It's a bargain that future generations will look back on and wonder how we could have been so blind. You could buy silver for $80 in 2026, before the Great Reset, before the COMEX default, before the dollar collapsed, and people didn't buy everything they could? Yes, because people were too busy looking at RSI indicators and listening to bank analysts who have every incentive to lie to them. Let me give you the roadmap for what happens next. Silver hit $80 today, January 6th, in the New York session. Over the next few days, we're going to consolidate between $78 and $80. The weak hands will sell, the strong hands will accumulate. Then, probably by the end of this week or early next week, we make the assault on $84. When we break $84 with conviction, when we print a daily close above that level, the floodgates open. Every trend-following algorithm on the planet flips bullish. Every hedge fund that was short scrambles to cover. Every retail trader who sold at 77 tries to get back in, and the buying pressure overwhelms the selling pressure by a factor of 10 to 1. From $84 to $100 takes maybe a week. From $100 to $120 takes maybe another week. The move accelerates as it goes higher because the short covering intensifies. By February, we're looking at $150. By March, $200. By summer, $300. And that's conservative. That assumes the system holds together. That assumes the COMEX doesn't default. That assumes there's no major geopolitical crisis. If any of those assumptions break, if the COMEX declares force majeure, or if war breaks out, or if the dollar loses reserve status, we could see $500 silver by year end. But here's what you must understand. The price doesn't matter, not really. What matters is ounces. What matters is physical possession. Because when the Great Reset happens, when the monetary system restructures, it's not going to be about how much fiat currency you have. It's going to be about how much real wealth you have. And real wealth is measured in physical assets, in land, in food, in energy, in metals. The people who own these things will emerge from the reset with their purchasing power intact. The people who own paper, who own digits in a bank account, who own promises from institutions that are insolvent, they will be wiped out. So here's your strategy. If you don't own physical silver yet, buy it now, today, this week. Don't wait for a dip to $75 that might never come. Don't wait for the RSI to cool off. Don't wait for confirmation from CNBC. Buy now while dealers still have inventory. Pay the premiums. Accept the delivery times. Get the metal in your possession. If you're holding paper silver, ETFs, unallocated accounts, futures contracts, convert to physical immediately. The counterparty risk is too high. The COMEX default risk is too real. Get the metal in your hand or in allocated storage where you have legal title. Watch the $84 level obsessively. That's the trigger for the next leg. When we break it, add to your position if you have capital. If you don't have capital, just hold what you have and don't let volatility shake you out. Ignore the noise. Ignore the bears. Ignore the analysts who say silver is overbought. They said the same thing at $30. They said it at $50. They said it at $70. They'll say it at $100. They're always wrong because they don't understand what's really happening. And finally, understand that you're not alone. You're on the same side as the Pentagon. You're on the same side as China. You're on the same side as JP Morgan, whether they admit it or not. The smartest, most powerful entities on Earth are accumulating silver. They're securing physical metal. They're preparing for a world where paper burns and only real things have value. You're playing the same game they're playing. You're just playing with smaller numbers. But the strategy is identical. Accumulate physical, hold through volatility, wait for the reset. The game is rigged, but once you know the rules, you can win. The rules are simple. Physical beats paper, real beats fake, scarcity beats abundance. And silver is the most scarce, most real, most essential strategic metal on Earth. China knows it, the Pentagon knows it, JP Morgan knows it, now you know it. The question is, what are you going to do with that knowledge? Are you going to sell at $77 because you're scared, or are you going to buy at $80 because you understand that this is the opportunity of your lifetime? I was born into this world. I've watched the game my entire life. I know how it works. I know how they manipulate the masses. I know how they instill fear and panic to make you sell so they can buy. I know the playbook front to back, and I'm telling you with absolute certainty that silver is going to $100, $200, $300, and beyond. Not because I'm guessing, not because I'm hoping, but because the fundamentals, the geopolitics, the supply-demand dynamics, the monetary debasement, the resource nationalism, all of it points in one direction, up. The correction from $84 to $77 was a liquidity grab. Nothing more. It's over now. Silver hit $80 today. We're going back to $84. We're breaking through. And the next chapter of this bull market is going to make the first chapter look like a dress rehearsal. Hold the line. Stay strong. Trust the process. And whatever you do, don't sell your silver to buy paper, because paper is what's dying. Silver is what's being born as the new standard of real value in a world that's about to learn a very painful lesson about the difference between money and currency. You've been warned. You've been educated. Now execute. The window is closing. The great reset is here, and silver is your life raft in the storm that's coming.